Hello, this is Alexander Green, Chief Investment Strategist with the Oxford Club. And today I want to talk about my three main predictions for the markets for 2022. But before I get into them, make sure to subscribe to the channel so you don't miss any of my future market updates and predictions. They say in real estate that the three most important criteria with any property are location, location, and location. Well, with these three projections for 2022, it's all about valuation, valuation, valuation. Prediction number one, I think value stocks will outperform growth stocks. We should probably begin by defining our terms. Growth stocks are companies that lead the market in rising sales and high levels of earnings. They tend to do well because of their unique niche and whatever they do in both strong and weaker economies. Value stocks, by contrast, are companies that are very inexpensive relative to sales earnings. They tend to pay bigger dividends. They generally trade closer to book value, and they are more dependent on the business cycle, but they're less dependent on interest rates. And so one of the things that's been happening lately, in the first part of the year, we've seen interest rates spike, which means bond prices have come down. And the way the stocks are valued, and if you'll forgive me for being a little bit technical here, is through discounted cash flow analysis. And all that essentially means is stocks are valued based on their future earnings. And the higher interest rates go, the less those earnings are worth at the present time. And so that's why we've seen a big adjustment in the NASDAQ, for instance. And in other stocks, like energy stocks and bank stocks and other, have actually held up well and even appreciated sharply. So that's what I mean by value outperforming growth. And in a down market, they hold up better because they're cheaper, and they also hold up better because they pay much bigger dividends. We've been in such a long period of growth outperforming value that we're really at extremes in the difference of valuation. And that's why I think value is likely to do better than growth in 2022. Prediction number two, I believe that small cap stocks will outperform large cap stocks. Last year, the S&P 500, the large cap index, returned 29%. That's an exceptional year. Small cap stocks did well, but only about half as well. But the reality is most of these small cap companies are growing very rapidly. They're nimble because they can change much more quickly, just like a speedboat can maneuver much more quickly than a tanker. And they're so inexpensive relative to large cap stocks that I think that they'll also outperform. And prediction number three, I believe international markets will outperform our domestic market in 2022. Many international markets, international economies did not rebound as quickly from the pandemic. They've been slower to recover. Their stock markets have been slower to recover. And the US market, which has returned essentially 16% a year now for 13 years, is so expensive relative to the developed markets of Europe and the Pacific Rim, but also to the emerging markets of Latin America, Asia, Eastern Europe, and India and elsewhere. So I do think it's likely we're going to see what we call a reversion to the mean, and all these inexpensive asset classes, value versus growth, small cap versus large cap, international versus domestic, should do very well in 2022. And so I'm going to be concentrating more of my recommendations in these areas, and I think you should concentrate more of your investment portfolio in these areas too. That's it for today. To hear all of my market commentary throughout the year on interest rates, currencies, stocks, bonds, crypto, everything that's happening, feel free to sign up for Liberty Through Wealth. It's absolutely free. You can just click on the link below. Thanks so much. I'll see you next time.